What's up, guys? Raymond here with our last financial statement analysis video in the German material stocks. I believe this is episode 15 in our German material stocks. It's been an honor analyzing financial statements for German material stocks, but it's time for us to move on to the German industrials after this video. But without further ado, let's get into the key ratios. That's how we start our financial statement analysis videos. If you're new to my financial statement analysis videos, what we do in these videos is we analyze the top 3 financial statements that are relevant to a company, those being the income statement, balance sheet, and the cash flow statement, and we pick out the key factors of each statement, like total equity, etc., and we attempt to come up with an overall picture of the financial strength of a company compared to what we usually see as indicative factors of a strong financial company, of a strong company financially, and we attempt to predict whether or not the company would do well in the future. Without further ado, we're going to start with the key ratios. The market cap, which is the overall price of the company valued by the market, which is 3.5 billion euros. The revenue figure, which is 34.02 billion euros, which is quite scary actually. That's like over 100%. Yeah, that's almost 100%. The revenue figure is almost 100% of the 1,000% of the market cap. So it's 10 times the overall sales of the company for one financial period, which the last one was 10 times the value of the overall market price of the company, which is, I've never seen that before. The price to earnings ratio is 55, which is very, very high actually. The earnings per share, which was 0.10. The beta level, which is the overall risk level of the company, was 1.8. So it's 80%. 80% of the overall risk level, minimum risk level, or average risk level of a stock in the stock market. The income statement, which is the first of the financial statements, shows a really high revenue figure, as we saw earlier, but the net income was negative. It was very, very minimally negative, but it was still negative nonetheless. In the 2020 financial year, the company managed to reduce its the revenue figure quite substantially. But it was still very high. But the overall profit margin was very, very high also. So considering that the revenue figure was high, such a large comparison, which being the dark blue figure in the graph, shows that the company made in excess of 10 billion euros as profit. But the company managed to gain zero profit in the 2020 financial year. So there's a large discrepancy in earnings as well as revenue. There's a lot of fluctuations there, and I guess that's reflected in the stock price and the PE ratio. So let's check the balance sheet, which is the overall liabilities compared to the assets. As you can see, the company has a large amount of assets compared to liabilities, which is quite dangerous due to the amount of interest that's going to be have to be paid on top of the returning the principal to the creditors. So in the 2019 financial year, it was almost 100% leveraged, and in the 2020 financial year, managed to reduce its debts as well as its liabilities. Sorry, its assets. The assets reduced by just a small amount, but the liability reduced quite significantly to around 80%, and it managed to maintain that into the 2021 financial year. Let's just check the cash flow statement to see how the company is doing with regards to managing its cash and its debt. So the company managed to start off with negative 25 million euros. The cash flow from operating activities was 92 million euros. Investing activities, the company managed to lose 510 million euros, but it didn't lose the cash. It just managed to spend 1.45 billion euros on capital expenditures, so increasing its assets, and the other 938 million was spent on other investing cash flows. So lastly, the cash from financing activities, the company managed to spend 1.28 billion euros, 1.18 billion euros, which is the bulk majority of it went to paying out, went to reducing debt, as we saw the liabilities figure decrease in the balance sheet, and the net change in cash for the last financial year was 1.68 billion euros negative. Compared to the 2020 financial year, the company managed to drop quite significantly in its net change in cash from 6.99 billion euros, and 2019 financial year, the company managed to increase from 2019 to 2020 by almost 1,000%, which is quite crazy. The company must have an extremely volatile stock price, as we saw with the beta level of 1.8. So without further ado, I'm going to close this video. Thank you guys for watching, and I'll see you in the first episode of our German industrials stock market analysis videos. Thank you guys for watching. See you in the next one.